All right, happy Sunday, you animals. Hope you had a good weekend. Let's get jumping into some prep. So, major thing to take into consideration heading into the new week is the market has made a really solid push here, and things on the daily charts are pretty extended. So the S&P 500 is trading 2+ ATRs, the Qs are at 2+, Amazon, Google, you name it. Daily charts are pretty extended. So with the extended daily charts, you do got to take into consideration there is that potential we do get a bit of a dip here. Personally, I think any dip that we get is going to be short-lived because of the weekly squeezes here. So the S&P 500, next week is going to be week 3 of a squeeze firing along. And then for the Qs, which the tech stocks have been really impressive as of late, but the weekly squeeze here for the Qs hasn't even fired yet. So daily charts, you got to take into consideration they're a little bit extended. You could get a little bit of a flush early next week, but I do think any flush you get is certainly a buying opportunity with the weekly squeezes here. If you can get weekly squeezes firing long, you're typically looking at 4 or 5+ weeks of momentum. So with that being said, let's get the squeeze up here, and let me show you what I'm focusing on. So my major focus here moving forward, you get the weekly squeeze for the Qs, which of course, if this can fire long, then basically every tech stock, Microsoft, Apple, Amazon, Google, they should all make a solid move to the upside. But what I like specifically about Amazon, as y'all know, is you got a beautiful weekly squeeze here. So Facebook is at all-time highs, Microsoft, Google. Amazon hasn't done that yet. And with the structure of the weekly squeeze and with the structure of the weekly squeeze in the Qs, I certainly think it's possible. So you have your stacked moving averages, you got your green 10x bars, histogram is turning positive, and earnings is coming up. So earnings is going to be on April 29th, which could be interesting. Certainly if earnings is a disappointment, it could kind of, ruin the potential fun here. Potentially earnings is going to be the catalyst to finally get the squeeze firing. So realistically, Amazon's been in hibernation mode since August of last year. So with the weekly squeeze, I think if we can start getting through 34.50, which you can just kind of see as a level of resistance here, I think if we can get through 34.50, things could get fun. So that's the general thought process I'm working with. With the weekly squeeze in the QQQ and with the weekly squeeze here in Amazon, if those squeezes can fire long, I think that leads towards some really nice upside over the next 4 to 5 to 6+ weeks. So what I'm doing with Amazon, and I did get a little bit of exposure here on Friday before the close. Ideally, we get a little bit of downside early Monday morning, early Tuesday, giving us an opportunity to add a little bit more. But typically, for those of you who watch my videos, I like the out-the-money put credit spreads. Usually risking 2 to make 1. You're putting the odds in your favor. And I think for any normal environment, so to say, there's nothing wrong with that. You're putting the odds in your favor, relatively, stress-free trades to the extent that's possible. I think with the timing here, with the big weekly squeeze in Amazon, with both the structure and the squeeze in the Qs, I think we could just get a really solid move. And I think when everything is lining up like this, if there's ever a time to get aggressive, it is now. So with that being said, instead of doing the typical out-the-money put credit spread, more so what I'm going to focus on is an in-the-money put credit spread. So you can see here, I sold the 35.50 puts and bought the 35.40s, basically placing a bet that come May 21st, Amazon is going to be trading above that 35.50 level. So of course this trade goes to crap if this weekly squeeze doesn't get firing. If the weekly squeeze fires, not only do I think we're going to get to a new all-time high, I think we're going to see 3,600 plus, maybe even 3,700. So this trade works in my favor if coming into expiration the weekly squeeze is fired, not just in the Qs but obviously here in Amazon, and we're trading above 35.50. Now a little bit different than usual. But again, here with the structure of the setup, I'm comfortable placing a bet that Amazon's going to move up more than 4 or 5% over the next month. And with the risk reward here, let's see. Yeah, you can see with the risk reward here, so those are trades we closed last week, but for this put credit spread, risking $7,000 to potentially make about, just about $18,000. So I'm kind of flipping that risk reward, certainly in my favor. And there's moments in time where you kind of come into the market, you look for your base hits, just kind of looking to steadily compound the account. And then there's moments in time, and being a fan of the squeeze, this is certainly one of those moments where you potentially get the pitch for a really big move. And I think that's the time to get a little bit more aggressive. So there's different ways you can go about doing that. You can get more aggressive in terms of, scaling up your position size, or you can, structure a trade that has a maybe not the highest probability, because there's no doubt if we sold the put credit spread at 3,100 or 3,200 is a pretty good probability it's going to work in your favor. But, your risk reward is going to reflect those odds. So you can scale up in position size, or you can structure a trade where the risk reward is really flipped in your favor. So that's what I'm doing here with Amazon. Any flush that we do get next week, and again, take into consideration it is possible, but if we got a little flush to say the AEMA, I'm looking at that as an opportunity to jump into a little bit more of the same position. So generally moving forward, that is going to be the focus. I do got an open position here in Roku, which is working great. April 30th expiration. Put credit spread with the short strikes at 350. And then for APPS here, this thing just kind of fallen apart last week. So going to continue to hold on to apps. And if we just kind of pull up the counter channels, keep in mind, when you got a trade going against you, don't start looking for things to convince yourself it's a good idea to hold on. So not what we're trying to do here. But looking at apps objectively, typically what it's done here so far this year is you get a flush, one or so ATR to the downside, back up you go. One ATR, back up you go. One ATR, back up you go. So potentially, it's just more of the same here. Big, ugly flush, you get to about 1 plus ATR under the 21, and then it bounces back towards the upside. So in a perfect world, that's how that one will unfold. But I guess we're going to find out. So I hope you have a good weekend. I appreciate you for watching. If you haven't already, go ahead and subscribe. And check us out at simplertrading.com. If you enjoy the videos, come trade with me live. So I'm in the options room Monday through Friday, 10:30 to 11:30 a.m. Eastern. And it's really cool. We're going through the same structure of setups we focus on in the videos. But, the little details that you can take when we're discussing this in real time, I think that can really help you improve your game. And obviously, with the trade alerts we post, you got the opportunity to make some pretty good money. So check us out. But until the next video, I hope you have a good weekend, and I'll keep you posted on the big bad weekly squeeze here for Amazon.